Hello, folks. So I'm sitting here looking at GDXJ, which that's my proxy for the mining stock sector. And so we've had some nice behavior this week, and I just wanted to spend a little time looking at that behavior. And so in the Sunday's update, the free newsletter, the Market Pulse newsletter, I was pointing out that we had this open gap and that was bullish. You know, the fact that price was finding support above that open gap, that was a bullish factor. And this week we've seen that, so okay, now price has closed that open gap, um, and that demonstrates a general principle that we want to keep in mind. Price does not like to leave open gaps. And so, you know, having that open gap filled, in my opinion, is actually a good thing. We've closed that question book. We've closed that question in the marketplace. Now we can do something different. And so that's exactly what happened. And so on the next market open, price gaps higher and, then starts moving consistently higher throughout the session. Market opens again, next trading session, we get another big gap. And excuse me, notice that gap is over a support resistance line or zone. And now in today's session, we have price. I'd call this mostly a sideways movement, a slight upward bias, but basically a sideways consolidation as price digests this big gap higher on the market open. And so this is very nice action. When we're looking for our next target, I would submit this is going into, let me back up just a little bit more. Andrew's pitchforks principles. So we've been watching these pink dotted lines. This is our downward trending correction channel for the last 4 months as gold, the precious metals, and the correspondingly the mining stock sector has corrected. And so my premise at this point is that the correction is over and that what we're seeing is now the um, new uptrend um, in this ongoing market. So that's what I wanted to point out here is that we can draw a parallel line to whether you want to do it based on the channel lines, so the downtrending channel, or you want to do it on the pitchfork. And of course, I like pitchforks, and so in this case they're both the same. So if we draw a line that is parallel to our pitchfork, we can then slide or move that line around on our chart, um, which is why Tim Morge, rest in peace, Tim. That is why Timothy Morge called these lines sliding parallels. And in this case, if we draw our sliding parallel and place it at our previous high, which was this, price overthrew the top of our downward sloping channel. But now we can project forward that this is a potential resistance level now as price moves into it. And so that's the next level we want to watch in this market. Do we run into resistance here? Does that again mark the top of this price movement and then price drops off again? We'll have to wait and see. I would suggest that this is pretty darn bullish action with these gaps this week. You might call those runaway gaps. Um, and that's a bullish thing. So, anyway, just a really nice looking chart. If you're, I'm not, just a quick, let me draw a line here. So, Mac, MACD is not a bounded indicator. It can go as high or as low as it wants to. There is a tendency in the markets for MACD highs and lows to act as support and resistance levels. Oops. Um, as price moves forward. And so in this case, what we would look at potentially is that MACD is currently trading within this range, and that when MACD gets back up to this level, assuming that it does, that that price relative to MACD is going to be overbought at that point, and the odds of a subsequent downturn or correction become higher. And so that's all we look at with the idea of prior highs and lows in MACD. Um, so, um, oh, and the point being there is that MACD still has some room to run before it gets up to that level. MACD is not yet at the level of overboughtness that stopped our previous rally. And so if you're bullish, that's a good thing. Um, and again, it'll be interesting. We'll have to watch and see what does price do when it gets up to this resistance level this time. And I'm done. Have a fantastic day, folks. Thanks for visiting.